Welcome to the Cultivating Success podcast. Jeff Sophir and Jonathan Wolfson are brothers and business partners of the top landscaping company, Nature's Experts. Nature's Experts is home to 6 companies that cater to all your outdoor needs. To learn more about Jeff and Jonathan, simply visit us at www.naturesexperts.com. On the podcast, Jeff and Jonathan bring together other business owners and entrepreneurs to share with you how they developed a prosperous company and how you can too. You will gain insights and meaningful advice on creating the building blocks to success and longevity in the entrepreneurial realm. And now, here are your hosts, Jeff Sophir and Jonathan Wolfson.
Hey, Drew, thank you for joining us today on the Cultivating Success podcast. I'm happy to have you here today.
Good morning.
I am always talking to you on a regular basis, so this is nothing new for me.
Good morning.
Jonathan would like something to say. Go ahead.
Good morning.
Good morning. Thank you for having me on.
You're welcome. You and I don't talk quite as often as John, but we are certainly familiar with one another, aren't we, Drew?
That's for sure.
That's right.
So for all of you that don't know, Drew actually is our CPA for Nature's Experts. And we wanted to bring him on here today so we can kind of describe what he does exactly. And really, one of the main things I want him to go over is the difference between an accountant and a CPA, and how a CPA has the ability really to help your company grow and position itself to do bigger and better things in the future.
Sure. So, the difference between an accountant and a CPA is the first thing is to become a CPA, you have to go to school first for 4 years. And most CPAs have master's degrees in either accounting or taxation. And then we have to take the CPA exam, which is a 4-part exam. When I took the CPA exam, the pass rates were between 30 and 40%. And I passed the first time, and it's a difficult exam to pass. And so just an accountant can't issue reports saying that they, certified the financial statements,
Right.
As well as, providing assurance in certain elements of the financial statements. And so a lot of times just a normal accountant wouldn't have the expertise on generally accepted accounting principles or, other accounting elements. And so a lot of thinking and analytics goes into really being an efficient and effective CPA.
So just to sidetrack a little on that. So one thing that we learned, we used to have an accountant, and I think, most people out there probably do, just because, having a CPA is more expensive, but it also may or may not be necessary based upon the size of your company, based upon what you're trying to do. Some people just try to file their taxes and they do all their stuff themselves. And by doing it all themselves, they just need someone to submit the information to the government and check over at one time, and it's considered, that's what their tax return is. So, what Drew does specifically is a certain level of accounting where, you have different things where it's something called a reviewed financial, or what are the different categories, Drew?
So in accounting and also in financial statements, there's compiled financial statements, which is provided by management, but the CPA is going and compiling them and putting them on paper. And then there's a reviewed financial statement where the CPA is giving a limited amount of assurance and then doing analytics on the numbers. So comparing them year to year, and there's certain checklists. And in a reviewed financial statement, you have to be independent, meaning that you don't have any kind of, relationship with management. And you're essentially giving limited assurance that there aren't misstatements on the financial statement. And then you have an audit, which is a higher level of assurance, which you're going and making sure that there's no material modifications that need to be made to the financial statement. You're doing a further level of testing and assurance.
So not every business gets to this point. A lot of businesses that have different loans, and they have different, ways of reporting that are required by the bank, need and require different things that Drew is really referring to. A lot of it really doesn't actually have to do with the profit and loss of your business, but it has to do with ratios. It has to do with where the money is spent, what amount of leverage you have, and different things like that. Drew, would you say that businesses that are of smaller sizes should still be doing, tax returns and have, information like this?
I think it's really important. And, I think taxation very much goes with the financial reporting aspect. And so I think a business can optimize their tax exposure as well as, optimize their financial reporting requirements in order to really have the most amount of funds to invest in your business. And if you understand the tax law and can, combine it with the financial reporting aspects, it's really a benefit to business owners. So that way they can expand and limit the tax exposure.
I know that one thing that we've had with you being our CPA, specifically for our business and for me being one of the owners, is that it is very difficult for me. I do not have the same kind of brain as you have. And it is very difficult for me, and I tell you this all the time, for me to interpret the numbers and interpret the tax laws and all different stuff that you explain to us as easy as it is for you. It's what you do every day. It's what you've chosen to be your profession. It isn't my profession. So I think that people have a misunderstanding of when you're a business owner, oh, you're all about figuring out, this and that. And how do you, it's really difficult for me. I understand it after it's explained to me, but if someone doesn't really understand, almost to dumb it down for me, I think that was probably, more difficult for you in the beginning, because that's just not how your brain operates with the information that you deal with on a daily basis. I think, have you learned that also, maybe whether it's through me or through other clients, that you've had to sort of realize that you can't just talk your foreign language of certified public accounting that you do in your office and with people that are colleagues of yours, but with clients, some of them need it to be explained to them a little differently?
I think it's about giving clients and business owners solutions. And a lot of times, tax and accounting is like another language,
Right.
Especially when you get into the, the details and the code sections and the pronouncements and everything. And I really try to explain it in an easy way in order to try to make things that are somewhat complicated or easily explainable topics. And if the business owner doesn't understand what I'm saying, then they're not going to understand the implications and the choices that they have in order to move forward. And so
but did you understand that from the beginning when you first started?
I didn't.
Clients?
I didn't.
You did not.
And
Yeah.
I did not. And over the course of, the time of being your guys' CPA as well as other clients, I've adapted and try to make things that are somewhat complicated into more easily explainable topics and ways.
For the real people here, not the geniuses of the world, for the real people here, you tried to explain it to us. And I appreciate it, because I think there's no way, if someone can't in your position, I couldn't be a client of that person. And it's not that I'm someone who's ignorant or stupid. I do not have the capacity to understand certain things at a certain level. Maybe if I studied it and I did, and it's something that's what I wanted to do, but I'm just uninterested in, my brain just doesn't go there naturally like yours does and soak it up like that. So I have to try harder.
It's funny because I was recently speaking to a partner at another firm, and we share a mutual client. And the way that they were explaining things to the client was they were quoting code sections of the IRS code. And the client really didn't understand what these code sections meant. And they were saying code section 469 of section, X. And I went in and I kind of told them, well, this means this, and these are your choices, and this is why you can or you can't do something with this code. And so it made it a lot easier for the client to understand.
So you're saying that the client was not speaking up and saying that they didn't understand it?
No, they didn't. It was funny because they sent me an email after.
Which is so
and-
stupid, which is so
Yeah.
stupid, because like I'm like not embarrassed of anything. Like you have to speak up and just say, I don't understand.
Yeah, no,
People feel stupid if they don't understand. They feel like they expected to know, but I mean, how would I know? You went to school for all those years and your brain operates differently than mine also. So it's like, how would I think I'm stupid because I don't understand? You know what I mean?
no, it's another language and you have to kind of translate it into English, and that's
Yeah.
part of what my job is.
Yeah.
Well, I definitely think it's important for people to learn. There's two different languages. I would say there's accounting language, and then there's, which obviously gives you the benefits of having a CPA and a good accountant, is utilizing all of these different tax laws and situations to figure out what works best for you. And then there's also understanding how to separate those components and then making it into what is the real business owner making and how much are they actually making? Because these are the two different things that I think people confuse, is because what you make on your P&L isn't exactly what you make. And you have to actually reverse engineer your P&L to figure out what you actually did make. So I think that kind of people need to really understand both forms. One is a function of trying to figure out the best possible situation for yourself in a tax basis. And one is actually, you need to understand also, as far as like, what is the health of your business financially and where is your cash going? Because you could have particularly a business that's doing very well on a P&L, but have very little cash actually.
Correct. You know, it's really about trying to keep it simple again, and it's trying to match income to expenses in the correct period. And then you have non-cash items like depreciation and amortization, and those items, you know, will reduce your profit on paper, might not actually have a cash impact on your business. And so being able to understand what's on paper and being like, okay, well, I acquired this business this year and that produced a lot of depreciation, might not mean that the business is doing well or not doing well. You need to look at the statement of cash flow, which shows your cash exposure, and really as a cumulative picture of the business.
I mean, as far as the communication between myself and someone like you, I still don't even think I'm understanding certain things as much as I ask. Like, I know that for a fact, because like, for example, the other day, there was something that went on here at the office, and it was sort of a question that I had had really since the beginning of me doing business. And I thought I understood, and I really didn't understand. I discovered that I didn't understand because John and I were talking about it, and he explained it in a way where it just became very simple, and for whatever reason, just clicked for my brain. So I feel like, you know, you're probably always gonna try to figure out new ways to communicate with your clients to make sure that they really do understand completely. Because I feel like now that I understand that, it's going to make it so much easier for me, you know, to understand everything above that. I thought I understood it, but I didn't.
That's why it's important that if you have a small business and you're growing your business, you really need to start understanding your accounting, where you're at, and have a minimum level as you keep getting through the different reigns of where you're actually going through. You know, you don't have to be a CPA or an accountant, but you do have to understand exactly where you are at that particular point. So
Right.
the easiest thing to do is that if you're a company that's doing a couple $100,000 a year, you probably are using an accountant, and that's pretty much cash in, cash out. So that really is the basics of business, is cash in, cash out. What are you left with? And then as you start to get a little bit larger and you take on debt, whether it's a vehicle or a property, then you have to understand, well, what does one vehicle do to my cash? And what does it do for my taxes? And then if I have one property, what does that one property do for
Your debt,
my debt? And what does it do for my taxes?
Yeah.
So each level, obviously, it changes your understanding. It does get much more complicated when you have multiples of multiples of
Well,
multiples.
sure, because then some businesses will add funding. So they add like a bank or whatever, and they're getting a loan, and people just think, oh, it's a loan, there's interest, there's the principal, but how it affects and hits your tax return and your P&L is two totally different things.
Absolutely.
And everybody has a different, tolerance level for growth and levels of the steps that their company are at. And so for us, I come from a very entrepreneurial family, and I feel like I understand business pretty well, and not all CPAs have that. And so we kind of try to look at where the client is in the process and what they need at that particular step. And if they're ready to take that next step of maybe going and acquiring another business or not, and what their tolerance level is, and if they can accomplish that next level, or maybe they're happy where they're at, and that's perfectly fine too. But kind of seeing opportunities and seeing what is needed at specific levels and revenue levels of different businesses. And I think that you try to create solutions at each level, and nothing is perfect, but you go and adapt to that specific level that the business is at.
Right.
I think that brings me to the next point, which is really it's relationships in general, but it's business professional relationships and how important they are. So specifically, an accountant, a CPA especially, has the tools to really be able to help you. So as somebody who's an entrepreneur and you're trying to grow your business and you're trying to figure out what you can and should and want to do, a CPA is a really useful tool to help acknowledge where you've been, where you are, and where you want to go based upon looking at your numbers. Because as somebody who's really entrepreneurial and wants to just grow their business and just is all about sales, you still have to figure out how many sales do you need to be able to do the said thing that you want to do. And you actually can take the numbers and you can reverse engineer the numbers to figure out if that falls in line with what your goals are as far as what you want your income to make, how much you need to grow your business, and what type of business you need to go after more.
That's 100% correct. And you go and you try to adapt to where people are, and you look at everything cumulative. So let's say you're going and trying to acquire a new business, and the first step is trying to see if the numbers of that business are actually what they're portraying. And then you go look at the tax implications of purchasing this business and the structure of it. And then you go and you look at the client's business as seeing if it's a good fit and if how it's gonna, mesh with the client's current business, and if it's going to be profitable for them. And maybe that business has a specific niche that's super profitable to add as a service to your current business. Then you've added another, profit center that's going to just further help you to expand. And let's say you guys are going and it's a sub service of the tree trimming business, and it's getting an amazing profit margin where you can sell some of your services from the tree trimming business to this other company that you're acquiring, then it really is a valuable addition to your business. And so it's trying to look at everything cumulatively, I think, is super important.
Well, that relates to the same point too. You can, if you are interested in acquiring, you can obviously look at financials yourself, and with whatever information that you have, you can look at them and analyze them to whatever understanding. And then the same thing goes to, you could take that to an accountant. So an accountant is going to look at it with their own particular set of eyes, but they do have a limited amount of information compared to a CPA, where they look at it in another level of sophistication to really help you understand the pros and cons of it. It ultimately is the business owner's choice to do whatever they feel like is best for their own business. But there's different levels of information. And the thing is, I don't think people realize especially if you're buying a business, your one implication from one singular purchase, it could be something that they highlight to you that the depreciation factor significantly reduces your risk in the first year. It could be that maybe that you're looking only at their profit and loss. Their profit and loss doesn't reflect their cash flow. Their cash flow is separate from their profit and loss. So if you're an individual and you're like, oh, I'm interested in buying your business, please give me your profit and loss. That actually isn't going to give you the information that's actually going to tell you, is this the right business for me to purchase?
We actually have a system now to capitalize on what John's just saying. We've been through everything that he's saying multiple times, and we really didn't have a foolproof way to diagnose, even with you, Drew, even having you there and the expert that you are, and even having some other experts in our corner, or to really qualify to make sure that the business was actually the right business for us, and to make sure that every single client and the way that they do business was going to fit in with our process and how we do things on the profit level that it needs to be at, so that it already makes money. We've implemented a new system now with our business called Aspire. And when I say we've implemented it, it's begun being implemented in a few of the businesses and now is continuing with the rest of them. And what we're going to be able to do is take any business that we want to purchase and plug everything into, Aspire, and we'll know if it already is a business that, for the amount of hours that it takes to do the individual work, how much they're charging, and all the other details that it takes to really be able to take that one extra step to know if, yes, this is a business to purchase, or no, this is a business not to purchase.
So that brings up a good point of, when you're purchasing a business, someone like Drew really is able to help you, because their expenses are not your expenses. How their profit works for them isn't mean that's how it's going to work for you. They're two different categories. And if you're someone who only looks at it from, if I was this business owner that you're buying, and not I'm buying your business, you can look at something the completely wrong way, right, Drew?
That's right. And you also have debt exposure, where let's say the current business that you're looking at, they don't have any debt on their books, and you're going and acquiring this business.
Yeah.
And so you're going to be taking on debt. And so that's going to require cash flow on a monthly basis being paid out. And so it's really important that you might be able to actually eliminate some expenses when you're acquiring this business, because there's services within your current business. Maybe you have a full admin team,
Right.
where you don't need their admin team. So it's going to reduce their expenses. But there's also items that you might have more insurance requirements necessary, which would increase your expenses in certain elements as well. So it's really seeing how much the business is actually going to cost you, and where you can, increase or decrease the expenses of the current business owner. Sometimes taking things to the next level costs more money, because you are now putting people on payroll, whereas before they were being paid via 1099. And so now you have your employment taxes and your workers' compensation and other things that the prior business owner might not have had.
Each one of these components add up to money. So Drew's referring to a 1099 employee, which is somebody you're just paying straight money to, and then they pay their own taxes individually to the government. And if you're a company, like a subcontractor, and if you're acquiring a business, typically you're a little bit larger of a business, and being a larger company buying another company, you're going to want to do things the right way, which is typically to have them physically on your payroll, unless they are actually a subcontractor that only works periodically for special projects.
Use their own equipment.
So I think these are all different things, where if you're buying a business and there's 10 employees that are 1099, if you add those 10 employees back, you're not talking about hundreds of dollars, you're talking about thousands of dollars a year that this is going to cost you, reducing your profits, which also could in turn reduce your purchase price.
We've also had a couple clients where they wanted to show really the sellers wanted to show really good numbers to a potential buyer. And so there were promised bonuses and other elements that were, not included in that P&L. And so the numbers looked really good on paper now, but actually the salaries and costs of doing business were potentially 25% higher than what showed on paper. And so it's really important also when you're looking at a P&L and a balance sheet to kind of get a feeling for what, makes sense based on the percentages of specific categories of expenses and income, because sometimes, the salary and labor costs are maybe way too low or way too high of what actually the numbers really should be.
Drew, I just had on another note, what are some of your business desires for the future for your business as a CPA firm? What do you personally want to accomplish, and what do you see the future like?
Well, I've been in practice now a little over 10 years, and I made partner with the firm 3 years ago, and I'm the third generation partner. My grandfather started the firm in the 1950s in downtown Miami, and actually it was before the big four CPA firms were allowed in South Florida. And so we were going and auditing Miami Seaquarium and other larger companies.
Yeah.
When I started, my goal has always been to be a regional CPA firm. That was the goal that I set in mind. But then you go and since I've been in practice, you say, well, how do you want to achieve that? And do you want the makeup of your company to look like? And for me, I would rather grow a little bit slower and maintain the quality of our taxation work, our audit and assurance work, our reviews, everything that we do, our consulting, and slow the process to really maintain a good structure and keep that family atmosphere, even as a somewhat larger firm. So I want to be super strategic about our growth and build our team from within and kind of create branches of what we have now and expand more organically. And so that's really what my goal is, and that's kind of how I see the path forward.
Sounds good.
Sounds successful.
Yeah.
Drew, what is really a difference? Because we've never used a really large accounting firm or CPA firm. What is one of the main differences, would you say?
So, we're kind of like a boutique right now, and the bigger firms, they're outsourcing a lot of their accounting and audit work and tax works to the Philippines and India, almost all of it. And so, you don't get that level of attention to detail in the larger firms that we give. And there's been a huge shortage of CPAs and accountants right now in the US. And so you're finding that the work quality is decreasing. And so a lot of these larger firms, there's also been a lot of mergers and acquisitions and consolidations in our space. And so you're seeing firms like ours going and getting acquired by the larger firms. And so we find that the quality has really suffered in the profession with the consolidations. And so I want to make sure that we maintain the quality and the personal relationships and everything that comes with how our firm has been created and what my grandfather's vision was.
The integrity of it.
Yeah. And so I just, don't want us to get too big so the quality suffers. And I see that the quality is suffering in a lot of places right now.
I could see that actually happen in some of these larger CPA firms, because how else are you really supposed to be able to do the work? And the thing is, it is a finite resource, and you talk about some of these really large companies that are CPA firms servicing these really large customers.
Yeah.
You can't, some of these companies are so large, you would need a dozen people just to service just that one customer. that are CPAs. And it's like, you can't just go find them, like a lot of, specialized education like you have. And I think that that's a really good point, that you're getting really more dedicated individual help with a CPA that you're working directly with versus a larger company. I could see that you may get your information faster because they have an endless amount of people to physically do the work, but then you don't actually pick up all of the information and the details from what they're inputting and what they're doing, which is really where a lot of the help can come from, especially if you're looking to grow your business. It's in the details.
Right, like the person that you're dealing with is a representative of that company, but they're not the one that actually did all the stuff you're talking about.
Right.
You become a number, and I will
As a
make sure
client,
as
you
a
become a
client,
number,
you
yeah.
become a number. And I've seen where really nice companies become a number at these firms. And I just want to make sure that that never happens. I value personal relationships. I value, getting to know the clients, getting to know their businesses. And so that's just super important to me. And that's not something that I just refuse to compromise on.
Well, Drew, I think that's excellent. I know we are very happy to have you as our CPA, and I appreciate you joining us today on the podcast. If you would, please let everyone know how they can reach out to you if they're interested in looking into Superstein and Superstein.
Sure. So our website is www.supersteincpa.com, and I'm on LinkedIn, Drew Superstein. And so please feel free to reach out if you have any questions. I'm always here to help.
Thanks
Thank
again.
you for having me on the podcast.
Of
Thanks,
course.
Drew.
Thanks, Drew.
All right. Bye.
This has been the Cultivating Success Podcast with Jeff Sophir and Jonathan Wolfson. To learn more about Jeff and Jonathan and their businesses, visit www.naturesexperts.com.